Dollar steady after ECB rate hold. Trade tensions and tariff in focus. The dollar remains steady as the European Central Bank, ECB, opts to maintain its interest rates, while tariffs and the Federal Reserve's actions are under scrutiny. Summary. The euro showed minimal response following the ECB's decision to keep rates unchanged, which was anticipated. The yen is buoyed by expectations of rising interest rates, although political uncertainties loom. A trade agreement with Europe is progressing as expected. On July 24, 2025, the dollar traded in a narrow range against the euro after the ECB decided to keep its policy rate at 2%. This decision came after a year of easing monetary policy, as the bank awaits more clarity regarding Europe's trade relations with the United States. Sean Osborne, the chief foreign exchange strategist at Scotiabank in Toronto, noted, "The sentiment that the ECB is likely to remain on hold is gaining traction. We have adjusted our expectations for rate cuts in September to below a 50% chance." In Japan, Deputy Governor Shinichi Uchida remarked that the recent trade agreement with Washington has alleviated some economic uncertainties. This has led to increased optimism in the market regarding the potential for interest rate hikes in the near future. However, analysts predict that the yen may encounter ongoing challenges following the upper house elections, particularly with the opposition contemplating a no-confidence motion against the government. Diplomatic sources indicate that the European Union is close to finalizing a deal that would impose a broad 15% tariff on goods imported from the EU, which may also extend to automobiles. This tariff structure is similar to the agreement the US reached with Japan. Thierry Wisman, a global forex and rate strategist at Macquarie Group, stated the ECB is facing a fundamentally different challenge compared to the Bank of Japan. The euro has appreciated significantly more than the yen in 2025, suggesting that the disinflationary effects of US import tariffs may be more pronounced in the EU than in Japan, or at least the ECB may believe this to be the case. Recent PMI data revealed some fragility in France due to proposed budget cuts, yet Germany and other regions within the Eurozone displayed resilience. German business activity has shown slight growth in July, although Mohit Kumar, an economist at Jefferies, commented, "Currently, there has been minimal impact from tariffs on the actual economic data." Economic fallout. In the meantime, risk assets have rallied as the trade agreements have mitigated fears of a global trade war economic repercussions. Next week, the Federal Open Market Committee is expected to keep interest rates steady as policymakers await the anticipated effects of tariffs on inflation and economic growth. Traders are currently estimating a 60% likelihood of a quarter-point rate cut in September, according to CNE's FedWatch tool. A series of US employment reports will be released next week, culminating in the significant June payrolls report on Friday. Additionally, the July Personal Consumption Expenditures Price Index and the first revision of the second quarter gross domestic product could also influence market movements. Osborne remarked, "Next week presents a lot of event risk, not just from the Fed, but also from a wealth of data that could shape expectations for September." The euro was last seen down 0.03% at 1.1766, close to the $1.1830 peak reached earlier this month, which marked its highest level in over 3 years. Against the yen, the dollar was up 0.27% at 146.88, having previously dipped to a 2-week low of 145.86 during the session. Olivier Courbe, a forex strategist at Société Générale, anticipates further strengthening of the yen, citing support from the trade agreement and the likelihood of raising interest rates. Japanese Prime Minister Shigeru Ishiba denied reports on Wednesday that he intended to resign, following a disappointing outcome in the upper house elections. The currency markets largely ignored news that US President Donald Trump, a vocal critic of Federal Reserve Chair Jerome Powell, would visit the central bank on Thursday, a move that heightens tensions between the administration and the Fed. The dollar index, which gauges the greenback against a basket of 6 currencies, including the euro and yen, increased by 0.17% to 97.36. In the cryptocurrency market, Bitcoin rose by 1.17% to $119,376.30, while Ethereum climbed 4.62% to $3,735.62. This report was compiled by Stefano Ribaudo with editing contributions from Ed Offman, David Holmes, and Nick Zinensky. ECB holds rates steady amid US tariff uncertainty. The European Central Bank and ECB stays the course amid uncertainty over US tariffs. In a significant move that has captured the attention of economists and market watchers alike, the European Central Bank has decided to maintain its current interest rates, marking a pause in its most aggressive rate-cutting strategy since the global financial crisis. This decision comes at a time when the economic landscape is clouded by ongoing tariff negotiations led by President Trump, which have left many uncertain about the future. On Thursday, the ECB announced that it would keep its key deposit rate steady at 2%. This decision follows a series of 8 interest rate cuts that have taken place since June 2024, aimed at stimulating the economy during challenging times. But here's where it gets controversial. Many analysts are debating whether this pause is a sign of confidence in the economy or a cautious approach in light of unpredictable external factors. The implications of US tariffs could have far-reaching effects on the European economy, and the ECB's decision reflects a careful balancing act between fostering growth and managing risks. As we look ahead, it raises an important question. Is the ECB's strategy the right one in the face of such uncertainty? Are they being too cautious, or is this a prudent approach to safeguarding the economy? We invite you to share your thoughts in the comments below. Your perspective could shed light on this complex issue.